Paula, thank you so much for being with me today. Can you please introduce yourself?
Absolutely. My name is Paula Martinez, and I am a loan officer with Home Financing Inc. I've been in our industry for over 20 years.
A lot of people recently are interested in learning more about lending and, loan types and everything that has to do with this industry, and how can they qualify actually to purchase a home. So you know that I prepared a few questions for you, and I know that you prepared some great feedback and some great answers for me. So why don't we start with the basic? So the first question is always, what's on people's mind: to rent or to buy, and why?
That is the question, right?
Absolutely.
I would say, taking into consideration those who have not owned a home before, there's always that inside fear of a mortgage payment. It's a new purchase, it's a large purchase. The unknowing, not knowing what to expect, essentially. Sometimes it's easier just to rent because they feel less sense of responsibility. Perhaps
Absolutely.
It's a little bit more comfortable.
Of course.
But the main answer to that question is absolutely buying a home and owning your own home has more benefits, for sure. I would say overall, purchasing a home it's investing in yourself. It's an opportunity to grow your wealth, your assets, and equity is also a huge benefit. So once you own your home, all of the surrounding homes around you are selling their homes. Essentially, you're gaining equity.
Absolutely.
Equity is low-hanging fruit. It's easy to pick. It's free. It's given to you. So equity is a huge asset. Number two, I'd say purchasing a home, it's not just a financial investment. It's also about being comfortable, calling something your own space.
Exactly, living in your own home.
Yeah, having your own amenities, your own design for your own home. So a huge benefit also of owning your home is the amazing tax write-off.
Right. Absolutely.
Who doesn't love a good tax write-off?
Absolutely.
When you're renting, you're not going to get the tax write-off. You're actually doing the opposite of benefiting yourself when you're renting because you're investing in somebody else's home and not your own. And I would say one of the last but most important things, it gives you future stability and potential investments that you're going to own in the future, giving you a larger financial portfolio.
Right.
So at the end of the day, there's numerous benefits to owning your home as opposed to renting your home.
So Paula, let's talk about the real estate trend since the beginning of the year. Where is the market heating up right now?
So as you know, the interest rates have been at a historic low for the past year. The good news is that's kept me busy. Homeowners are lining up to position their mortgage into a more competitive situation, as well as the home buyers are lining up to take advantage of the low interest rates and purchase the new homes. During the pandemic, of course, jobs were lost.
Right.
Businesses were closing. Everything was just kind of going backwards, even though the interest rates were low. So I'd say what's heating up right now is the economy. Everything's opening back up. Less unemployment, more jobs, bringing in more buyers.
It's all great news.
Yes. The rates are still low right now, which is great. We want to take advantage of that. So what I would encourage people to do is put their best foot forward and get pre-approved.
Right.
Right now, the interest rates being low gives you a lower payment. Giving you a lower payment gives you more buying power.
Exactly.
So take advantage now and get pre-approved.
So Paula, from what I understand and from what you're saying, that if a buyer is on the fence right now buying a home, then it is right now the best time for them, to get qualified and to buy a home.
Absolutely.
So Paula, we know that getting a pre-approval letter is the first step to purchasing a home. Now, can you please explain to us what is a pre-approval letter and why would a prospective buyer need one prior to shopping for a new home?
That's always a good question. People show up with these letters and really you don't know the background of it except here's a pre-approval letter. So a pre-approval letter, it's very simple. It's the lender's stamp of approval to let the listing agent know and the sellers know right off the bat that we have taken the buyer's information and we've pre-underwritten it to show that it will fit the guidelines for that in particular loan.
So with a pre-approval letter, there is a purchase limit, right?
Correct. So what we'll do is collect all the income documentation and all of the proper items so that we can calculate everything that we need to and tell the buyer this is exactly what limit you can purchase up to. So keep in mind, if you don't have a pre-approval letter, I always tell my clients you're just window shopping.
Right. It's great to go window shopping, but when you don't know your limit, then
the mall is great, but it's not, if you're out window shopping with your clients, it's not productive. So I encourage, get pre-approved. This is a correct investor mindset.
True.
You want to know how much the bank is able to give you, what you can lend on, so it'll make your job a lot easier.
So can you tell us what are the factors that affect a mortgage payment?
Sure. I've got my underwriting manual here, right here. I'm just kidding. I mean, there's a lot to the factor of loans and the FICO scores and how everything gets approved. But the main things are your credit, your collateral, and your capacity. So we've talked a little bit about this at some of our meetings, right?
Yes, we did a lot.
Yeah. So the first one I'd have to say is I'm going to just touch on credit. Credit's important. There are three credit bureaus: TransUnion, Equifax, and Experian.
Paula, can I please stop you here for a second and ask you a question? So we've seen these apps like on our phone, like I have Bank of America app, and it gives me kind of like an idea about my FICO score.
Credit Karma.
There are Credit Karma because it's a website. So there are these websites and apps. Do you think they are accurate? How accurate are these websites and apps?
That's a huge question. So, or point taken. What happens is there's different algorithms to pulling credit. So what you're seeing when you're looking at some of the apps, Credit Karma or any of the banking apps, this is based on small loans. So if you were to, in one day, for example, apply for a small credit card, go down the street and try to purchase a vehicle, and then come to our office and try to get a home loan, you're going to receive different credit scores. So those apps, although they are great to gauge to see what idea your credit score is in for a credit card or a small loan, it's not going to necessarily be the mortgage pool from a lending institution for a mortgage.
Right, so it's not the accurate one for purchasing a home.
Correct. So getting pre-approved and making sure you know your mortgage credit pool is huge. So out of TransUnion, Equifax, and Experian, we'll take the middle score, and that's the first place to start with credit. So the second C is capacity. Capacity is essentially your income. We're taking a look at your income, and we are taking your outgo, all of your monthly minimum payments divided by what your income is, and possibly your new mortgage payment. So there's a certain ratio, a certain percent that we're looking for. And why this is built in and why it's important is so the buyer's not overextended. So we're not going to put you into a $5 million home if your budget really only calls for $500. So capacity is the second C. And last is collateral. So collateral is the, essentially it's either going to be your single family residence, condominium, multifamily use, whatever home you're going to be purchasing, that's your last C. And also the down payment, how much you're going to be putting down. So with all of this information calculated together, credit, collateral, capacity, we decide right then how much you're going to be approved for and how strong your interest rate is going to be.
So Paula, how does the FICO score affect the interest rate? What is the relationship between both of them?
So our goal is everybody wants to have the 800 plus FICO score, right? That's the filet mignon, the best everything. Yeah. Realistically, that gives you the better interest rate, right?
So the higher the FICO score, the lower the interest rates.
Correct.
Okay.
And you want to position yourself eventually for that. However, sometimes life happens, right? There's unforeseen circumstances. I mean, we just came down off of a pandemic shutdown. Anything can happen. That is not your fault. So I just encourage, even though if you're not at that plush 800 FICO score and you are below that, there's ways to improve your credit. So that leads me right back into our pre-approval process. If you take a minute and you're looking at Credit Karma or you're looking at your bank app and you feel, wow, my credit score's a little bit lower, I'm a little nervous to even go forward with that. Getting pre-approved, I just need to be very clear. It's not committing you to anything. You're not signing up for anything. You're merely taking a moment to have the lender look at your overall situation to find out what you're pre-approved for, what direction we need to point you into, and what needs to be fixed, whether it be your credit, whether it's your down payment. There's a lot of things to factor into getting the pre-approval. So just taking the time to do it, they're going to benefit themselves for sure.
So basically, it means that they are learning about their options out there. They're putting themselves on the track of buying a home.
That's it. That's it. And I believe, in my honest opinion, people don't step forward because they feel like they have to make a commitment right then to purchasing. And that's not it. I think the smart buyer, whether their FICO score they feel is in the 500s to the 800s, just taking a look into something, it's free, there's no commitment, and you're just learning what your options are, just like what you said.
And Paula, just a quick question that came to mind. How long is the pre-approval valid for?
That's a great point. So the pre-approval you could be pre-approved for as long as the income hasn't changed, as long as the buyer hasn't acquired more debt. The only time we need to really rerun anything is the credit. It's good for 90 days. But again, if they're just shopping and they're with you looking for homes, we're not rerunning it every 90 days. It's as though you have to when you put an offer in and it's beyond 90 days, then we need to relook at credit.
Paula, thank you so much for being with me today and all of the great information that you shared with us. And I can't wait until, part 2 of this interview, because people are still waiting to learn about the major types of loans so they can have an idea about what it is. So thank you so much for being with me.
Absolutely. Thank you for having me. I appreciate it.
And with that, I conclude this video with thank you so much for being with me. And until next time, and wait for part 2 of learning more about the loan types.